stocks are technically speaking oversold and a rally is likely, and I already explained this last week based on the market breadth measures, but I'll show you some of those measures again. I think they're important and it's of interest to many people. Of course, Iran war is adding uncertainty to the entire forecast, but as above, short term there is an oversold condition. Longer term, there is still bullish market, but who knows, maybe we're turning around. The precious metals, and especially precious metals miners, are deeply oversold. But is this an actual oversold condition within a bigger uptrend bull market, or are we already in a downtrend? And we will look at a 2020-2015 example to show the same story for gold miners and see where they're gonna go, or at least try to. And I'll finish up with crude oil, which some very reasonable forecasters, such as Saudi Arabia people, are already forecasting to go to 180, at least according to the Wall Street Journal. $200 oil, what could possibly go wrong? We'll examine that, but think about in terms of tax on survival itself for people in countries such as emerging markets and third world countries. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, March 20th, 2026. As always, please remember to hit the like button, share this video, make a comment. Even if you put a hearts or a thumbs up in the video, that would be very much appreciated, and YouTube will rank this video higher. I've been getting quite a bit of comments. Thank you so much for that. Please keep them going. This is very much helpful for the channel. If you're a subscriber, stay tuned. We'll be covering various securities in the members only videos, such as lots of oversold ETFs you can see. Some of the large cap stocks are somewhat oversold, and as far as speculative securities go, I am sort of taking it easy with speculative securities right now, just because of general uncertainty. So we'll need to first look at the generals, so to speak, so like large cap stocks and companies that hold them, or ETFs, and only then, if we have time and something like if we have energy, we can look at the other ones. All this, don't forget to sign up at MasterChartsTrading.com. I'm using my proprietary MasterCharts Trading price action indicators, which you can see on this chart. There's green, blue, red, and yellow lines, which are available for TradingView.com, and you can have them on your chart. Just sign up at the website. All right, looking at S&P 500, first of all, so the first support I was talking about is the green line. We came down, this is an all-time high on 26th of January, where I'm hovering. We've pretty much been coming down since then in a relatively orderly fashion. So we're now just made a new low below this November lows. And now we are at lowest level since September. So that's how many months, how many weeks, or how many months, let's see. It's about 200 days or 130 bars, so about 6 months or so. So yes, indeed, finally, people are realizing that whatever is happening in the Middle East is not just like a, Venezuela operation. Venezuela operation was, it was nothing compared to this. We're seeing basically the entire region in flames, and as you probably know, the news already, lots of strikes on various energy infrastructure. Additionally, there are strikes on things like water purification facilities, water desalination facilities. So there is a lot of things that could go very, very terribly wrong and create a giant humanitarian crisis and potential movement of, hundreds of thousands, if not millions of people, and where they're gonna go. So those are all very tough questions to answer, but let's try to concentrate on the chart. So first of all, let's look at the 4-hour chart and why I keep saying the stocks are somewhat oversold. So we're looking currently at basically futures, S&P 500 futures on the 4-hour chart. So 4-hour chart just means each candlestick is 4 hours worth of activity. So notice basically we've been kind of going back and forth, going back to January of this year. We've pretty much been kind of going up and down, until finally we got a very, very clear signal right there on basically February 27th. So something was already leaking out. People were already selling. So all of those downward facing arrows are places where we saw a close below this red support resistance line. Okay, notice what's happening. So when we close below this red support resistance line, and this is a intraday chart, 4-hour chart. Okay, so we use the red and the blue line. We can sell it. We can sell it short. So all of those downward facing arrows would be the areas where I would be considering selling it short. So the latest opportunity to sell short was right there on the 17th of March, so 3 days ago. And it was extremely successful, if you could see. So we went from about 6,700 to about 6,400. That's a very nice 4% move if you open the short position in the futures, or you open the short position by buying inverse ETF. You can also buy puts on S&P 500 ETF SPY. So that's a very much a viable way to do this. So notice today's candlestick on this futures chart. It looks kind of like a hammer, which is a good news. I think this is a potential sign that we're about to bottom out. I don't see the same thing on the actual chart of S&P 500, but then again, this action I think happened at the literally So this is the close right here, and then we saw a pretty significant rally after that, after the close. So it does look like we're at least attempting to bottom here. And as I'm about to show you, I'll show you that there's a bunch of other market breadth measures which are indeed pointing to the fact that we might be very close to a bounce. So here's one, and I showed this last week as well, and this is a 10-day exponential moving average of the advanced decline line. So very briefly, every day there's a number of stocks on, this is New York Stock Exchange. There's a number of stocks of New York Stock Exchange that go up, advances, number of stocks that go down, declines. We take number of advances, from that we subtract the declines, we plot it, and then we take 10-day exponential moving average of that number. So on this chart, the only thing that's visible is this 10-day exponential moving average. And last week I said that we are definitely oversold because we were like below minus 600. And I was saying that there's a potential for a bounce, but that bounce was literally 2 days. So not very significant, and then we see a new low. So once again, we're again strongly oversold or deeply oversold, and that implies that we are more and more likely to at least try to bounce. So a bounce next week is again more likely than it was, even more likely than it was last week. So this is a very short-term measure. Now let's look at put to call ratio. So once again, I explained this last week. Puts on top, put to call, put divided by calls. So this number right here, or this line here, is the 10-day exponential moving average of puts divided by calls plotted on daily chart. So you don't actually see the number, but you see the exponential moving average. And then those lines in the back, those red and green lines, they're just there to show you where do we stand relative to about neutral position. So a neutral position would be around 0 or so. So notice what's happening right this instant. We are well above neutral. We are definitely into overbought territory for puts. In other words, so many people think that the stock market will collapse that they bought this insurance puts, meaning that they are thinking that the market will go down and they will get a payout if the market does indeed go down. Okay, so right now we have a ton of puts. We almost have as many puts as we had, back in April of last year, 2025, when we went on this tremendous rally. Can this happen again? It's possible. However, we're not like in that stratospheric territory just yet. So I wouldn't necessarily yet blindly buy S&P 500. But we're kind of getting to that level where basically so many people think that we're going to collapse, the opposite usually happens. So this is an opposite indicator. When we have too many puts, too many people are too bearish, the rally happens. The opposite quite often happens as well. We have too many calls, people are just exuberant and they think the stock market will go to the moon. The opposite quite often, but not always happens. Especially during the bull market, it's very difficult to catch the top. But here's a great example in February of 2025 when we had way too many calls and then the market collapsed. But then a few months later, in May of 2025, we also had way too many calls and market didn't really do much. We continued higher. So during the bull market, too many calls, it's not necessarily an important measure. We're still in a bull market. We're still in an uptrend. So too many puts, too many people think that it's going to be going down. That's what we're worried about more. So right now we are indeed in the situation where we have quite a bit more puts, quite a more people who think the market will just unravel to zero, than we have people who think that the market will continue higher. And again, this is a type of scenario where a rally is quite likely. For my purposes, even if I didn't know anything about the market breadth, I can just look at this chart here and tell you that we are not yet at the point where I would become interested in buying this chart. We're getting there. We're getting close. So if we get to this blue support resistance line, that's another 4.5% or so. So this level is at 6,189, about 6,200 basically. If we get to that level, then S&P 500 would be officially oversold, and I would be personally quite interested in buying it. Right this instant, it's still, we don't know. We're still waiting. And as I just said, there is a good chance that at the very least a relief rally would unfold. So this relief rally could take us towards the red line. This is a very easy target, which is about 2% higher. We're at 6,500, so if it gets to like 6,600, that's about 150 point rally for S&P 500. It's a reasonable rebound. And then at that point, we'll need to again reassess. Do we want to sell it short again, or do we want to do nothing or keep the long positions if we opened it? Okay, so this is the state of S&P 500. And let's continue to the dollar. So I kept saying about dollar, so very briefly I will recap. Dollar entered the bear market here back in March of 2025. Notice this close below the red line and then a follow through the downside, lower lows, lower highs. Finally here on 26th of January, 27th of January, we saw a 3-year low and what I think was a false break. Why did I think it was a false break? Because there was this gap right here between 23rd of January and 26th of January. So Gaps at the bottom of the range is quite often a good giveaway to see if this is a bottom. Additionally, I think I already mentioned the USD JPY broke out earlier. It broke out actually in October in favor of US dollar. So I was already kind of not sure if dollar is still in a downtrend, if USD JPY is actually in an uptrend in favor of US dollar. So I was correct. We're making higher highs and higher lows. We're finally trading above the red support resistance line and approaching very closely to the blue line. The blue line would imply a new bull market for the dollar and higher highs and higher lows even further. But also notice the way the indicators have been kind of curving towards the price action. And also notice that if we project them forward, and this, you can see that basically all we gotta do is just trade sideways, and then we can already be in an uptrend like very shortly, within a few weeks possibly, or even a few days. So I believe US dollar has indeed turned around, and by extension, when US dollar is in an uptrend, precious metals normally are in a downtrend. So let's look at gold. Gold has certainly sold off since the records that were set on 29th of January. We are down already from the records about 20%. So right this instant, basically I was just showing you the same thing with S&P 500. Technically speaking, we have a new setup. You know, like we see a low or even a close below the blue line. Now we just need to see another close above it. And that would give us a signal to buy gold. Okay. Let's look at gold miners briefly. So gold miners are obviously even more volatile. They did set a record a little bit later, in 2nd of March here, but then pretty much unraveled as well as the war broke out. And notice that we're actually well below the blue line, and we're technically speaking deeply oversold. So let me show you why I think we're deeply oversold, not only on my chart with the blue line, because yes, definitely blue line shows us, yes, we're indeed oversold, but I wanted to show it to you on a market breadth point of view as well. So this is a current situation. This is the 20th of March 2026, and up here, this is what's called ticker symbol on StockCharts.com. It's $BPGDM, so bullish percent index for gold miners. So notice what happened. They were at 100% very recently. They were at like 98, 95% also very recently, and then completely collapsed. They're currently at 3.7%. So in other words, there's literally like I think one gold miner or maybe two within the entire index that is on a buy signal for this particular index. You can read about it. This is an actual index. You can read it in the stock charts help section. You can find it. It's called a school. Okay, so everybody with me. So right this instant, bullish percent index for the gold miners is like abysmal. So basically nothing is on a buy signal. Is this considered deeply oversold for a bull market? Absolutely, yes. My point that I was just trying to make is that if indeed dollar is about to re-enter a new bull market, it will continuously weigh on gold and gold miners. So dollar entering a new bull market, and gold miners will, and gold miners will come under further pressure, most likely. Now, a bounce here is almost a guarantee. We just don't know at what point. Maybe we'll make another low and then we'll bounce, but a bounce is very, very likely for the above reasons. One of the biggest reasons, of course, is this index. Bullish percent index is basically, at almost zero, 3.7%. So let me show you a different chart during a different time period when this type of low readings were not indicative of a oversold conditions. Okay, so this is a time period between 2011 and 2015. So it's about 4 years or so. And down below here, this is gold miners, GDX, and up here it's the same bullish percent index for gold miners that I just showed it to you. So notice that this is a different type of chart altogether. Notice that we're kind of going down here, if anything. This is a downtrend in security. And notice that we're seeing, like, for example, this low readings right here. It was 0 right here in April of 2013 and several times again. It was 0, but the price of gold miners did not go down, did not rally. There was a small rally, but overall it continued lower and lower and lower. So this is a bear market basically. And during the bear markets, we're thinking the opposite. We think about what can we do to sell it short. So we would be looking for overbought conditions, you know, things of this nature, when there's too many bullish percent index, and then we would want to sell it short. Is this similar to what we're having now? Not yet, but what I'm trying to explain is if this very low reading that we're experiencing right now is indeed the beginning of a new bear market, then this becomes a new normal. A low reading like this would become a new normal, and the bounce, a higher reading, let's say into 40s, 50s, 60s, 70s, would be potential opportunity to sell this security short. So this is this is what I was trying to explain is, yes, precious metals are oversold, but could gold miners be already in a downtrend? And this is the example I was just showing you. So it's obviously kind of difficult to tell at this point. Technically speaking, we're still in an uptrend, but thinking slightly ahead, looking at the dollar, there is a potential for what I'm telling you to come to pass. And finally, we come to the topic of that's dear to many people, and that is of interest to many people because many people drive, many people, use the benefits of cheap oil and just oil in general, production, casting, plastics, fertilizers, even things like solar panels, they still require energy, and energy pretty much comes from dinosaurs, old crude oil itself. So Wall Street Journal just came out with a article where they're saying that $180 oil is not impossible. So currently we're looking at oil, light crude oil futures is United States mark, but Brent is very similar. Brent, yes, okay, it's also spiking pretty high, but it's actually very similar as far as prices are concerned. So let's just look at this light crude oil futures. So it's basically CL1 exclamation point. So it's US oil. So last few weeks here we see significant volatility, obviously. Prices spiking into, like 120s at one point. Brent, I believe, just closed. Yeah, it's a new high, new closing high. So definitely not a good sign for pretty much anybody. We can look at weekly chart as well. We can do a Brent maybe. It's just easier to look at Brent. So Brent is already, it's not, doesn't go all the way. Brent is already at highest level since 2022, so like 3-year high or so. I don't really see it going down just yet. the way things are going, we are seeing pretty bad scenario. And so I created this illustration. Basically, we are seeing what's called an oil shock. And at first, we see higher prices for oil, which in turn leads to higher prices for things like diesel and gas, for fertilizers, for freight, and eventually food, because all of that is produced using oil. We're using fertilizer, for example, that's produced from natural gas, and natural gas is also under attack right now. So we're seeing all of that stuff translate eventually into food. Obviously, in the United States here, we don't see this type of malnutrition, but in many countries around the world, this is a common sight. We're talking about tens of millions, if not hundreds of millions of people living very close to poverty and very close to an outright hunger. And, basically we're doubling this. So we could see many millions of people being pushed into hunger in places like Bangladesh, Pakistan, Sub-Saharan Africa. They're barely scraping. Many of those people are barely scraping by. And then if all of a sudden food prices double, well, obviously that could lead to things like riots. That could lead to things like bigger instability. That's why I got those people here with machine guns. Warlords locally will seize power and exploit local populations, such as in, for example, South Sudan. This was already happening in many places there. Now, if places like Pakistan become more unstable, you have to understand that Pakistan has nuclear weapons. And so if they decide to do something of that nature, like they decide to, I don't know exactly what could happen, but there could be a breakup of, for example, states like Pakistan, and nuclear weapons could fall into somebody else's arms. So there's some really scary scenarios if this oil stays high and there is going to be destabilization. And this destabilization is already happening. For example, we're already seeing strikes on water desalination facilities in the Middle East. Think about that. You're living in a desert and you have no water suddenly. So the population will clearly need to be adjusted. So people who live there, they may need to migrate, but where would they migrate to? We're talking about tens of millions of people there. It's a lot of people. So this could become very, very scary very, very quickly. Within month, this could become extremely scary. Like, for example, more hunger, more unrest, and especially in weakest countries such as emerging markets and frontier markets such as for example Bangladesh. This indeed will also cause more disease and eventually more death because of the crowding conditions, malnutrition, and all of those things. So this is the oil thing that we're facing. It's a very uncomfortable scenario, especially if you are living in one of those countries. And right this instant, I don't see a way to get this down except for what they're already doing, and that is rationing. So I already read the article in the Wall Street Journal that right this instant we're already seeing rationing in places like Philippines, Pakistan, Bangladesh. They're already rationing fuel, they're already rationing food. So where does this leave us as far as technical analysis goes? Clearly oil is bullish. basically we're seeing, buy signals. Every time we close above the blue line, we see a buy signal. There was one right there. You had literally 2 days to get in on March 2nd and 3rd when people were just still shocked and you were able to get in here. Then you already made nice money. But yes, this is a dangerous situation, and I kind of want to hear what you guys think about it. Am I being a little too panicky? Am I overestimating this? Could there be less dramatic scenarios? Absolutely, but could there be even more dramatic scenarios? That's also a possibility. So make a comment, let me know what you guys think. After that, head over to MasterChartsTrading.com. Click on sign up for one of the products. So once again, I have the trading indicators, these lines on the chart. So every time we close above the blue line, we buy. Pretty much you can trade anything under the sun. This is, for example, S&P 500 futures. Here it is on 10-second chart. Sure, you can trade it on 10-second chart. In fact, this would have been a tremendous success. All you had to do is just buy it right there. That was a, breakout. See? You see it not here, but here, and then boom, huge number. That's if you bought for example an option here, that's a very nice gain right there. So that's the indicators. They're available for this interface, TradingView.com. Once you open a free TradingView account, come back to my site, Master Charts Trading, sign up for one of the indicator plans, and I'll open the door for you on TradingView.com. Sounds convoluted, but I'm sure you can do it. Any questions, send me a message. Help, contact, see right there. Newsletters, so I send out daily alerts about various securities we trade. So for example, this week we'll be covering lots of various ETFs that are, many of them deeply oversold, like Europe for example. Some of the large cap stocks and a very few speculative securities. Like I said, I'm not sure I want to get into speculative ones, but definitely large cap stocks are of interest right now. Best deal is to get both trading indicators and newsletters, and best deal of that is to get a yearly subscription at $49.95 per month equivalent. It's much better than $59.95 per month if you were to pay monthly. Don't forget, you always get free 7-day trial, and you can always cancel, but very few people actually do. So sign up at MasterChartsTrading.com. Don't forget to make a comment on this video. Hit the like button, share this video. Thank you again for watching. Have another great trading week. Bye-bye.